I welcome all the students to the video lecture on the topic Small Finance Bank. A very recent innovation in the Indian banking structure is the establishment of new banking institutions. It is called small finance banks. The intention of establishing this small finance bank is to provide the basic banking facilities to the large number of population, to provide the basic banking facilities to the general public of the country, and particularly to provide these facilities to the unbanked people. So let us try to understand what is small finance bank. The basic intention of establishing the small finance bank to increase the financial inclusion in the country. To increase the financial inclusion means to provide the basic banking facilities to the unbanked people, to provide the banking facilities to the rural areas, remote areas of the country, to include the people, to include the general public in the financial sector. That is what the concept of financial inclusion is. So with this particular intention, the small finance banks have been started in our country. The key objective of small finance bank is to perform lending activities among the weaker sections of the community and get complete financial inclusion. These small finance banks can be operated by any individual with 10 years of experience in the banking sector, non-banking financial institutions and microfinance institutions can also operate these small banking services or the small finance banks. The minimum paid up capital for the running of the small finance bank is 100 crore rupees. Minimum 100 crore rupees is required as a paid up capital for the establishment of the small finance bank. After getting the approval from the government, the time period for the setup of the small finance bank is 18 months. Small finance bank can provide loans to farmers, micro, small and medium enterprises, and they can also provide loans to any individual, and they are also in a position to accept the deposits from the general public. The small finance bank was recommended by Nachiket More committee, which is the committee appointed for increasing the financial inclusion in the country. And this particular committee for increasing the financial inclusion recommended to establish small finance banks in our country. Basically, the small finance bank can perform all the operations of the normal commercial banks, normal type of commercial banks. But the most important target of the small finance bank is to provide the loans, to provide the credit facilities to the low income segment of our country. So this is the basic introductory information on small finance bank. After discussing this basic introductory information, now we will move towards the features of small finance bank. The very first feature of the small finance bank, it supplies credit to small business units, small and marginal farmers, micro and small industries, and it also provides credit facilities to other unorganized sectors of our economy, or we can say unorganized entities. This is the first objective, first feature. The second feature of the small finance bank is that the minimum paid up capital which is required for the establishment of small finance bank is 100 crore rupees. The foreign shareholders can also purchase the shares of the small finance bank as per the rules and regulations laid down by Reserve Bank of India and foreign direct investment policy which is implementing in our country. The individual, the resident of India with 10 years of experience in banking sector and financial sector will be eligible to run and to set up a small finance bank in our country. As per the norms of RBI, small finance banks have to maintain cash reserve ratio and statutory liquidity ratio. The existing non-banking financial institutions of our country, microfinancial institutions, local area banks that are owned and controlled by the local people, local residents can also opt for, or they can also convert their institutions into small finance banks. Small finance banks can sell foreign exchange reserves to the general customers. They can sell mutual funds. They can also perform the insurance business. The small and the most important thing is that this small finance bank can also be converted into a full-fledged bank. The most important feature of the small finance bank is that it is mandatory for the small finance bank to lend the amount to the priority sector. Particularly these priority sectors are related with the agricultural and small business. They have to lend the 75% of amount to this particular priority sector. Another mandatory condition for the establishment of the small finance bank is that for the initial 3 years, the 25% of the bank branches should be established in the unbanked areas, remote areas and detached areas. So these are the basic features which focuses its attention of the small finance banks towards increasing the financial inclusion in our country. Then the most important thing is local focus and small customers. It is the basic intention of the small finance bank to provide credit facility, to provide loans, and while providing these loans they should focus on the local uh, businessmen. They should focus on the local small business and to serve smaller customers, and it is the important criteria for providing license to such small finance banks, that they should focus while lending, while providing credit facilities, they should focus on the local entrepreneurs, small customers. The last feature is that the area of operation of the small finance bank is normally restricted to few districts or some nearby adjacent districts of the state. If necessary, in certain conditions, it would be allowed to the small finance bank to extend its area of operation beyond that 3 or 4 districts. So in this way, these are some important features of small finance bank. After discussing the features of small finance bank, now we will see what are the advantages of small finance bank for the economy and what are the advantages of the small finance bank as far as the objective of inclusive banking or financial inclusion is concerned, that we will see in with the help of some points. While discussing about the advantages of small finance bank, we can also say it as an importance of the small finance bank. The very first importance or the advantage is that the small finance bank, they do pay higher rate of interest for the deposits. These banks offer higher rate of interest for the deposits, near about 9% of interest rate per annum for the big fixed deposits this bank offers. and for the senior citizens the rate of interest in certain times goes up to 9.5%. It is the higher rate of interest which has been given for the deposits in order to attract the deposits towards the banks. The second one is it also makes a commitment to provide the banking services to the doorsteps of the people, and it also gives a convenient services to the clients, to the customers. And these banks are very easily accessible to the rural area. It is very easily accessible, the banking services through the small finance bank. The banking services can be easily accessible to the remote and rural areas. And next important thing is that these banks not provide the loans to the corporate segment or the corporate sector. It does not lend, it does not provide any facility to the corporate sector or the corporate segment. Therefore the risk exposure is lower than that of the other banks in the country. And as usual we have studied this particular point. The small finance banks plays a very important role as far as the financial inclusion is concerned, and to make the country and to move the country towards the cashless transactions. For the cashless transactions, the small finance bank also plays an important role in our country. It is accelerating the India's journey towards cashless economy. The cost of banking will come down due to the competition from payment banks and small finance banks. Due to this competition among the various banks, definitely the cost of banking will come down, and it will be helpful for the general customers, specifically for the rural customers. This small finance bank is also helpful to check the malpractices which takes place in financial transactions, in making payments in various transactions. For customer, it is very convenient for carrying out banking transactions at a fingertips, and it also accessible to the rural area, and it also plays an important role in the financial sector. And also, as I already mentioned, it plays, the small finance bank will fill up the gap of lending. It also effective tool to get the country out of poverty, and it plays an important role in providing the finance and credit to the priority sectors, particularly the sectors like agricultural sector and small business. So in this way, this small finance bank is very important as far as the development of the rural economy, as far as the development of the marginalized sections of the country is concerned. So in this way, I stop here in this particular lecture. Thank you very much.